Welcome to the Daily Injection Program. I plan to do one of these or even two of these a day as long as the coronavirus is absolutely taking over our lives. An AM program and a PM program. And with daily injection, I mean an injection of wealth, an injection of information, an injection of education, of knowledge. And my plan is to, in about 10 to 15 minutes, congest everything that I learned every day from about 42 different sources with the sole goal in mind of educating you so you can go on with your day knowing the insights and ramifications of what's happening around the world as the coronavirus plays out in our lives. Now, I want to start off with telling you that, quite honestly, this is the most tragic human disaster since World War II. The death toll itself is not the problem. The death toll, the human tragedy of it, I mean, we see much bigger tragedies every day. Every single day for 365 days a year, about 50,000 children die every day from malnutrition. They just don't have enough to sustain for their next meal. So 50,000 kids a day. In terms of human tragedy, 400,000 people a year die from smoking-related disease. Alcoholism is about 300,000 people a year. That's in the U.S. alone. So 7,000 deaths right now in total worldwide. We're talking about something that the death toll of it currently is very much contained and under control. But in order to keep it that way, the prices that the global community, the society pays are grave. You have to entirely stop industry, commerce, and trade. You're putting a strain on the economy that is almost unbearable. And that's where we are today. We have decided collectively as a human society that this pandemic should be governed by authorities, by medical professionals, and therefore we are subjected to the kinds of restrictions that are out of this world. Quarantines, curfews. People have been told to shut down their businesses, not to go on public transport, to leave the country or to come into the country only on acute situations. And this is something we have not seen in our lifetimes. The SARS and the MERS, other forms of the corona or other forms of a flu, I should say, sharing a very similar molecular form, have not caused such disruption. This COVID-19 it's creating the sort of disruption that will absolutely create an earnings recession in the United States. Now, accompanying every one of my reports of my daily programs is a PDF report that contains the graphs, the charts, and all the written information that we can't put into a 10 to 15 minute program. So make sure you go to wealthresearchgroup.com/V1. It's a must read report. You have to arm yourself right now with accurate, daily, updated information. And that is the best report for you right now in terms of what's happening right now in the markets and around the world and with response. So I want to get into the response. First of all, Goldman Sachs has released its forecast that it projects an earnings recession as soon as next quarter in the United States. So that's huge. Basically, we're entering a recession. And if you see the markets, they're basically a discount mechanism. So they're in advance starting to price in how much of a recession, how big of a recession they think will happen. Also, Goldman Sachs has alerted its high net worth customers that they think about half of the country will be infected at some point. Now, the problem with the coronavirus is not the lethality of it. It's more the infectiousness. It's easy to get infected. It's easy for it to spread, through touch and aerosols. And we don't have the vaccine yet. We are not immune yet. So that's the big problem. No mayor, no governor, no head of state, no president will just dabble with this. Will say, look, let's see what happens with this. Let's see how many people get infected. No, they will go for the worst case scenario, and they will shut down everything because they don't want on their watch, because the public is looking to them for information and for advice. They can't have on their watch the worst human disaster since the influenza of 1918, about 102 years ago. So that's important to understand. We will keep seeing these draconian, out of this world laws, like mandating people to close their businesses, to go home, to stay at home, curfews, and subjecting people to fines if they break their their home quarantines. These are measures that are going to stay with us. We live in a new world. We live in a new world. Absolutely, we are. Now, I want to continue with the VIX. The volatility index is reaching 2008 highs. And the reason that the markets are so fearful is that the Federal Reserve has just thrown itself on a live grenade by lowering interest rates to zero and by doing QE5, which is buying $500 billion worth of bonds and $200 billion worth at the outset of mortgage-backed securities. Now, what it did was it took itself out of the game in order for us to stay in the game. The credit markets and the bond markets this past Sunday, so 2 days ago from recording this, and yesterday, Monday, as the market started to open, if they wouldn't have done that, if they wouldn't have bailed out and eased the credit facility, you would have seen the shortages of dollars in your ATMs, in your banks. There would be spikes of interest rates overnight, and they basically alleviated all that by jumping on that live grenade, but they've taken themselves out of the game. The next bailout is going to come from either the IMF or the World Bank or the Bank of International Settlement, and of course the central bank in the United States will keep expanding its balance sheet. It's not out of the game in that way. It's going to do massive QE programs, but interest rates are done. They're not going to lower to negative rates now. And I'm talking real fast because I'm trying to condense these programs to 10 to 15 minutes a day. That's why I want to make sure that you go to wealthresearchgroup.com/V1 for the complete report. And if you're interested in what's happening in the precious metals market, because there's a huge discrepancy between the paper markets, completely manipulated between London and New York, and the paper ETFs and the physical stuff that you're not going to be able to put your hands on. Trust me on that one. I've talked with one of the biggest brokers in the United States, MilesFranklin.com, which is my personal bullion dealer, and he's saying, look, we're going to have to limit our transactions. We will have problems securing coins and bars and bullion. This is a real problem, and I'm telling you that there is a limit to how much money can be spent on treasury bonds. There is a point when you hold two magnets together where it seems like they're not even attracted to each other, but at some particular distance, they cannot help but touching each other. That particular instance is where we're at right now. It's the point of no return. The governments and the central bank cannot continue to just buy treasuries without buying gold to offset those reserves. You will see them diversify. You will see the fiat monetary system going back towards buying gold, not as a standard, not as an official standard, but definitely in terms of the buying volume from governments and central banks. So that's the second thing I want to talk to you about. The third thing, and that's a really big deal, is what's happening right now in terms of government structure. Because this is a pandemic, because this is global, you will start seeing governments looking for the IMF, the Bank of International Settlement, and the World Bank for bailouts, for bailouts, for blanket bailouts for their governments, loans, and you might even see the introduction of SDRs, the special drawing rights, which is basically another word for one world currency. So think about that. Think about the globalists that have been dying and drooling over this sort of a disaster in order to introduce some of these measures that we are all very fearful of, which are comprehensive global governance and everything that has to do with the one world government. So just make sure you watch this as this starts to get introduced in the news. Now, Trump is not going to stand for that, and that's important to understand, but look for that in the mainstream media. In terms of past times that we've seen market crashes, hemorrhages like this, it takes 3 to 5 to 6 years to recover. Now, this is including dividends. I know many people know that the 1929, 1932, we came back in price only in 1949. So 17 years it took to get back to the price that we were in at the top of 1921, but that's 1929, but this is without dividends. So just make sure you understand. If you're a retiree or looking to retire, and what you are looking to do is sell every year a bit of your equity, not look for the income to be the facilitator of your retirement, but the equity itself, it may take a long time, 3 to 5 years, for you to see the 3,300 that we saw on the S&P 500 just 3 weeks ago. This was the fastest all-time high to bear market in history. It's going to leave trauma with millions of people worldwide, and you will see people that will never touch the stock market again. Not for days, not for weeks, not for months, not for years, many for decades, and some people will educate their children not to do it. That happened in the Great Depression. It can't happen again. And what's really important is to understand that the mining shares, the mining companies, which I really want you to go to wealthresearchgroup.com/gold playbook, because that's the most comprehensive gold investing and silver investing manual online, and to wealthresearchgroup.com/ratio, because the gold silver ratio is broken all-time high. It's now 120 to 1. Look, mining is not going to stop. Mining is going on 24/7. And while operators of hotels, airlines, cruise ships, entertainment, education, anything that has to do with sports, heavy industry, all of that is ground down to a whole oil, banking. The mining industry is not stopping. It's running 24/7. It's not going to have an earnings recession, and you will see a lot of funds going into the mining shares. So I want you to pay attention to that. We already saw them rally yesterday. Let's talk about helicopter money. There is absolutely no doubt in my mind that some form of direct injection to the individual level will come from many countries around the world. You will have countries insuring the unemployment for a year. You will have governments that will do fiscal policies, that will have infrastructure programs, they will revitalize industry, and you will see many more people dependent on the government at the other side of the coronavirus crisis. Look for this talk, helicopter money. Look for direct injection to the pockets of individuals so they can spend, so they can offset the fact that they don't have a paycheck right now, that they were unfortunately sacked from their work or being put to unpaid leave until this comes back. Now there are companies that are actually hiring right now. Food industry, everything that has to do with groceries. Amazon has just hired 100,000 people. Banking is in distress because a lot of people are coming in to refinance their mortgages because of low interest rates, because they've gone to zero. So you are seeing some industries that will actually benefit from this. Obviously, pharmaceuticals, vaccines, everything that has to do with that. But look, this is going to be big, and we will see some sort of helicopter money. Okay, lastly, let's talk about what's happening right now in terms of what markets are not liking. Because obviously, the Fed cutting to zero was not enough. The Fed announcing QE5 was not enough. What do markets want? For one, they want less paralysis, less clashes between Democrats and Republicans. They want to see the classic American unity. They want to see that everyone is on the same boat and we're all going to get inspired to move together. That's why you're seeing a lot of problems right now, because what the government is not inspiring is that everyone is on this together and want to solve this quickly. And we will see a bill introduced either today or tomorrow that will start to alleviate that concern. So that's one thing. That's what the markets really want. Washington in unity, the Senate united, everyone united on the same page. And obviously, Jerome Powell and Trump united on the same page. That's one thing that will really help. The second thing that a lot of investors are looking for is, what are the numbers? What should we expect in terms of earnings recession? How much will this hurt? And those numbers will come up in a couple of weeks here. So when they do, expect the markets to start losing all of that volatility, because what's happening right now is everyone's thinking, how much should I discount? Is this going towards 2,200? Is this going all the way back to where Trump was elected, 1,800 on the S&P 500? Where is it going? That's why you see insane volatility every day. So just make sure that you're on top of that. Again, go to wealthresearchgroup.com/V1 for everything that I just discussed today, including charts, graphs, and much more information. That's a must-read report. And look for the PM update for the daily injection program as I do it once the markets are closed. And look for a daily update, because this is not going away anytime soon. Thank you for joining me.